So this is a weekly chart of dollar index. You can see it's had a pretty strong run all the way for the best part of a year or more. What I'm noticing though is we're getting this lower high in the momentum indicator. So there's clear divergence there. Wouldn't say that this uptrend is broken, but I think that we'll potentially come back and look at this. I guess the underlying factors here are the raising interest rates in the US, and that could potentially see some more buying in the US dollar. In fact, it most likely will. And so this uptrend, which is still intact with higher lows all the way across, and then also higher highs as well. So I'll be looking for the market to head that direction, but the weekly is kind of showing that maybe there's a little bit more retracement to be had. However, it will always be subject to the data and sentiment, and that's the driving force at the moment. When we come and have a look at the majors, we've got the Aussie dollar, this little inverse head and shoulder pattern with the neckline, broke that on Wednesday over the US inflation data, and the commodity markets are still quite strong as well. So we're seeing a fair bit of interest in the commodity currencies, and I would expect that to continue. We are starting to get close to being overbought, so there might be some more upside here before having a retracement and maybe retesting that level later on. This week we've got wage data on Tuesday, I think, and unemployment numbers on Thursday for the Aussie. So again, this will be dependent on the US. If the US dollar starts to gain strength again, then we'll get that weakness back to test that. Euro dollar came back and tested these levels here, which is the May and June lows at 103.50 area, and it's fallen back into this messy range that it was in for almost a month, certainly mid-July to just recently. And where to now? I would say we're going to probably fart ass around in this area again for the foreseeable future, with the euro fundamental picture not very strong at all. And same here, it had an inverse head and shoulder pattern on the pound, on the cable, but it failed, unlike the Aussie, failed to break through the neckline. And the weakness in Europe and the UK, with the energy prices, the UK's got their inflation numbers. It's expected to be 9.9, but I wouldn't be surprised if it's double digits. And more selling in the cable to come. Dollar yen, bit of a hard one to look at, but I suspect we're going to be just bouncing around in here for the foreseeable future. Dollar CAD, that's just a mess of a chart. No interest in trading something like that. Whilst the Kiwi also broke its head and shoulder pattern like the Aussie, and they're looking to raise interest rates this week, is overbought. So I expect maybe a bit of a sell-off as the buyers have run out of buying power. But again, that'll be data dependent, right? So your indicators such as RSI are only as good as the sentiment allows. So you can remain overbought for a lot longer than the market expects, or oversold for a lot longer than the market expects. Okay, that's the currencies. US stocks, go figure. Crazy market, makes no sense. You got high inflation, you got rising interest rates. I guess the jobs market is still pretty good, and earnings seasons has been mixed, but just the raising interest rates and the tightening credit markets, I can't see why you want to be buying stocks, but certainly it has been. It broke through that 50 retracement, on Friday and did it strongly. So the FOMO trading now, fear of missing out. I can't see it fundamentally why it needs to be going higher from here, but you know, stock markets make no sense. And the Nasdaq, probably the better performer. Aussie's going to come with it, and the FTSE will go with it as well. You know, globally, everybody's going to be buying, so makes no sense, but it's what's happening. Commodities, a bit of a mixed bag in commodities. We're seeing, you know, gold holding up. Copper looks like it might have peaked here for the time being, back on the 50 moving average. The commodity index, the Bloomberg commodity index, making smaller gains. Energy market, both in oil and natural gas, also ticking higher, although Friday was a little weaker. And oil looks like there may be a bit of a sell in there at the moment, but you know, the energy market is still a big concern. And then, you know, as we come into the northern hemisphere winter, that's only going to be exacerbated. So I don't see that sort of changing, but it's certainly the strength in the commodities at the moment is doing well for the commodity currencies such as the Aussie, the CAD, and the Kiwi.